Hello, I'm Bill Simon, CPA in Clearwater, Florida. My firm is a boutique firm that specializes in representing people who have tax problems. We have offices in the Tampa Bay area in Clearwater, also in Tampa, and also in Sarasota. We cover a vast part of the state of Florida as well as considerable areas in other parts of the country. Today I want to speak with you about a topic that is surfacing in IRS's new list of the so-called tax sins of the world. And they put out a list every year of issues that they intend to concentrate on as they audit tax returns. One of those areas this year is S corporations. And one of the favorite things that a lot of owners of S Corps do is they take a very small salary and then they take the bulk of the profits out of the company as distributions. By doing this, they still pay income tax on the distributions as they do on the salary, but they save the payroll taxes on the distribution side. So this has been a favorite thing that has been done, and people who get really greedy claim no salary. IRS has been attacking this for some time, but they have elevated it to one of those areas that they're using the computers to screen for this in. And so you're going to see a considerable amount of resource of IRS being spent on this particular area. The other thing that they're doing with S Corps is looking at loss deductions as it relates to the basis in the corporation. In order to deduct a loss from an S corporation, you have to have basis in the stock of that corporation. To get basis in the stock, you have to be the purchase price of the stock or actual loans directly from you to the corporation, not loans from a bank that you guarantee, or profits that you have taken from that you have made in the corporation and not taken a distribution for. So this is an area that will get considerable attention, so be careful as you deduct losses from S corporations. You should also be aware that IRS has entered into an agreement with many of the states, like for example the Florida Department of Revenue, where they are actually conducting audits on corporations and providing that information to IRS for areas such as the areas I've just talked about on S corporation salaries, the filing of 1099s or the lack of filing of 1099s. And it's being done under the guise of a state audit, but a lot of the information has no bearing on state liabilities whatsoever, but it's simply to provide information to the Internal Revenue Service for their consideration of an audit. So keep those in mind. If you need assistance in these areas, we certainly are qualified to do that. We'd be more than happy to help you with that. And when you hire W.H. Simon & Company as your representative, you are getting expert advice from people who have experience in dealing with IRS and who have been employed by IRS in the past. For example, I was there for 15 years and was an executive in IRS. My partner, Eric Schmitz, was a revenue agent with IRS. And when you hire us, you are hiring us individually. So you're not hiring someone who you will never see or talk to, as happens with a lot of the so-called national firms that do representation work. Thank you very much for your attention, and if we can be of assistance, please contact us at the information listed below. Thank you.